Hello, my name is Yuya Shimizu, the Chief Investment Officer of Hibiki Path Advisors. We are a long-term and engaging investor focusing on mid to small caps in Japan. Today, I'd like to directly explain the shareholder proposal we made to Japan Pure Chemical on their AGM scheduled for 25th of June. Thank you for listening. I'd like to start from the company explanation first. In page 3, I explained the short history and the business of Japan Pure Chemical. So it was founded in 1971, went through management buyout in 1999, and became public in 2002. It's currently listed in Tokyo Stock Exchange Prime section. The business is that they produce plating chemicals to global semiconductor packaging and also electronic parts makers. They are especially strong in high-end gold plating. So basically, they have a high technology and their business is protected with very strong patents, which is highly admired by their industry players. However, if you can look into their financials, it is clear that unfortunately their earnings has been flat and actually declining the past few years, which is very different from most of the other plating chemical companies, which has actually grown their earnings. With that said, the past 10 years cumulative TSR is 56%, which is actually less than half of Topic's 128%. So currently it is a micro cap with US dollar value about 131 million total market cap. But if you look at the balance sheet, its net cash, including the investment securities on the balance sheet, is about 100 million US dollars. This means that the enterprise value is only around $31 million. So today's presentation is actually I am going to explain the shareholder proposal we made to Japan Pure Chemical, but the fundamental core message here that I like to stress is that we're talking about the balance sheet management and JPC's capital allocation policy. Unfortunately, the board has opposed to a view on this shareholder proposal, but we believe our proposal is actually accommodative to what they want to achieve. So first of all, let's just look at the balance sheet. In page 5, it is very clear that the balance sheet is hugely overcapitalized, with total nearly 90% of the balance sheet being cash deposits and also public stocks. Actually, this is the cross shareholding, which tends to be an issue these days in Tokyo's stock markets. In page 6, I go into some details of the investment securities. There are actually 2 points. So about 50% of their balance sheet is investment securities. And one name, JCU, stands out as 40% of the total investment securities, which JCU is actually their, I call it friendly competitor plating company, which has strengths in copper plating. So JPC owns the competitor's stock, meaning that if an investor invests into JPC stocks, nearly half of what we invest is actually invested into different companies' business risk. We have been pointing this out for many years, but unfortunately, the company never dealt with this cross-shareholding issue in the past. The second part, which is more concerning, is that JPC management calls this holding a cross-shareholding with business synergies. 2 points here. Actually, this cross-shareholding, which JPC owns JCU, the stake is about 3.4 billion yen. However, on the flip side, the JCU's ownership of JPC, which is only about 0.7% of the total outstanding shares, is about 120 million yen. This is more than 10 times difference. So basically it's cross-held but unevenly balanced. That's one thing. The second thing is that, as we have been hearing from the management, the earnings has not been growing, and we cannot confirm any meaningful business synergies between JPC and JCU, at least from the outside. So then why keep holding these shares? We wanted to make the point very clear in our shareholder proposal. On slide 7, we change gear and talk about the capital allocation policy of JPC. So currently they have a goal to achieve return on equity of 10% as written in their mid to long-term plan. So hypothetically speaking, let's make some assumption. If we say that they can achieve 1 billion yen of net profits at some point, which actually is 10% higher than its historical high of about 900 million yen that they achieved long time ago in March 2011. So 1 billion yen ROE of 10%. Of course, the math is simple. The total net assets to achieve 10% return on equity based on this net income is 10 billion yen. And current total net assets is about 14.6 billion yen. So it means the net assets should reduce more than 30% from 14.6 to 10 billion. So what we are proposing is a large-scale share buyback, about 20% of their total outstanding. We are actually trying to help the management to achieve this return on equity goal. So in order to achieve that, they should also consider about the denominator, which is the net assets. So we're just raising this very simple question that they should also, of course, focus on growing their earnings, but also think about controlling their balance sheet, especially the net assets. Unfortunately, management has opposed to our view, and we are disappointed that our argument is not being heard by the management. So let's check whether our proposal is aggressive or unreasonable. The case study here is a company called Toyo Seikan. This is a beverage packaging company, the Japan's #1 company with cans and glass bottles. So Toyo Seikan actually came out with a new capital policy last year that they said they're gonna target return on equity of 8%. Obviously, they have a very strong balance sheet, and if they are going to grow their earnings, their net equity will increase. So what they have stated here in their announcement is that they are going to pay out more dividends and also buy back shares in order to offset the increase in net equity that will be introduced from the profit growth over the next 5 years. So they are targeting to compress the equity. Based on this bold move, the stock price of Toyo Seikan actually rose significantly after the announcement. The market investors liked the fact that they are also thinking about the efficiency of their own balance sheet. And I'm just questioning to JPC's management why they don't have such determination like Toyo Seikan. I am questioning whether they are really fulfilling their duties to maximize the corporate value of Japan Pure Chemical. So now I'd like to briefly explain the details of the shareholder proposal we made to Japan Pure Chemical. It is item number 3 and number 4 in the AGM. So item number 3. This is actually about the amendment of the Articles of Incorporation of JPC. Currently, JPC actually can decide about the surplus fund distribution just through the board resolutions, which means it doesn't go through the AGM resolution. Basically, in Japanese corporate law, it is actually assumed that these surplus distribution should go through the resolution of all the shareholders in the AGM. But they have actually changed this Articles of Incorporation in 2019. So, in order for shareholders to ask the share buyback, we cannot decide. Only the board can decide, which we believe it is unfair and it is not right from the corporate governance standpoint. In fact, in 2020, a large bank, Mizuho Financial Group, actually had the same article that the board can decide the surplus fund distribution. And because there were few shareholder proposals, the board actually decided that they will voluntarily want to change the Articles of Incorporation so that these surplus distribution go through the AGM resolution. Well, that's the overall direction of corporate governance improvement in Japan, and we are asking the same thing to Japan Pure Chemical, which we believe it is extremely reasonable. The second proposal on page 10, item number 4, is the share buyback. As we have already discussed, we believe that in order for JPC to achieve their own goal of 10% return on equity, this size of share buyback, at least 20% of the outstanding, should be required. And unfortunately, the board said that they do not agree with our view because they don't have enough capital or enough funding available, which we believe is a completely misleading statement because of the fact that they have, nearly 90% of their balance sheet in cash or marketable securities, as well as they have more than 7 billion yen in retained earnings, which theoretically they can distribute. I would like to say that the management should understand that by doing this, the market will welcome their change in stance, and if the stock price rises, they can use this strong stock price as a currency to have a M&A actions with other companies. We believe this is actually strategically also important thing about having a reasonably fairly valued share price. So, as a summary closing note, I like to say 4 things. One is that we have been a long-term shareholder of Japan Pure Chemical, and we admire and highly value their technology, and we completely support their vision to grow and expand their business. However, we are sad that we don't feel the determination, similarly to Toyo Seikan, that they want to make the companies better and have a strong corporate governance standards. So second point is basically that they should change the articles of incorporation to allow AGM to be the sole judgment body of their distribution and major corporate decisions. Point 3, we believe that our shareholder proposal, item number 4 about the share buyback, is basically supportive, trying to support their target return on equity of 10%. We are saying that they have changed their dividend policy to introduce dividend on equity of 5% last year, which of course we welcome that, but also that is not sufficient. We believe they should buy back shares aggressively, funded by selling off their cross-share shares and other investment securities. Lastly, the management has made some counter-arguments, and you can see that on the press release, but we do not believe that is compelling counter-arguments. We would like all the shareholders to think about what is best in order to maximize their corporate value and make a fair judgment. The points that I have described here is explained in detail in the links that we have shown on the next slide 12. The statement from the board of directors, actually we have put those into our statement. We have made some points about their counter arguments in the lower link. You can actually access the link from the QR code as well. So this is it about our shareholder proposal to Japan Pure Chemical. Thank you very much for listening to my presentation, and if you have any questions, please contact this email shown on the last slide, info@Hibiki Path Advisors. Thank you very much. Bye bye.